151 companies in the S&P 500 are expected to have reported earnings by the end of this week. Here to weigh in on how earnings season is progressing, David Lebovitz, global market strategist of J.P. Asset Management. David, it appears that about 3/4 of companies that have reported this week so far have exceeded earnings estimates. So what's your reaction to how earnings have been so far?
I think when we look at earnings in relation to estimates, it makes sense that we see earnings beating estimates. We've spent the past 6 months lowering estimates, so when the bar gets lowered that much, companies should be beating. However, when you look at revenues, that's where we're seeing a little more disappointing news, and I think that that's directly related to a stronger dollar and lower oil prices.
And now big bank earnings are behind us. Big tech earnings still to come from the likes of Facebook later today, Google tomorrow, Apple next week. What's your outlook on the rest of earnings season?
I think that the first and the second quarter are going to show negative year-over-year earnings growth, but I anticipate that as we get into the third and fourth quarter of this year, we will see earnings tick higher as these effects from the dollar and lower oil prices generally dissipate.
So what sectors are you currently bullish on? Which ones are you staying away from?
Well, we maintain our tilt towards the more cyclical sectors, so technology, financials, those things that should really benefit from an improving economy and a rising stock market, so definitely favoring those cyclical sectors at the current juncture.
And we should mention that oil is down a little bit today, but is off the lows. How safe would you say it is to say that we have seen the bottom in oil prices at this point?
I think it's a little bit too early to call a bottom, but I think we have found some stabilization at current levels. I think it'll be important to watch the production and consumption figures going forward, as well as things like rig counts to just get a sense of where oil may be headed next. It's important to remember with commodities, they're really driven by supply and demand, so that's what we're watching as we try to gauge the next move in oil markets.
Well, thank you so much for the big picture, David Lebovitz, global market strategist of J.P. Asset Management. And I'm Brittany Umar for The Street.